Dan, I want to talk to you about this. I want to play a soundbite for you from our Jim Cramer on Mad Money last night. I want to get your take on what he said about the Mag 7.
Great. I would not jump back into the Magnificent 7 because as of tonight, there is no Mag 7. Came up with that name, scrapping it right now. No moniker fits the two or three that remain viable. And I'm not going to put it, and there's nothing magnificent about Tesla or Nvidia.
Nothing magnificent, according to Jim Cramer, about Nvidia or Tesla. Do you agree?
Look, I think what Jim's saying is you have to look at these all separate growth names. You can't just put them all in a basket. If you look at Nvidia, in my opinion, one of the most oversold there in terms of where I think the chip trade's going. Tesla, as we've talked about, has its own specific issues that they need to navigate in terms of the Musk brand issues. I think you got to look at these in terms of, do you own Microsoft? I think you own Alphabet. In my view, you double down on tech here if you believe, which we do, that this AI revolution is still in the early innings.
So you're saying, do you agree? No more Mag 7. It's really about Alphabet and Microsoft, and the other ones, case by case, valuation, entry point. Is that the story?
I think it's still, I think Mag 7's there. But I think what Jim's saying, which is a great way to put it, is you have to see how they're going to navigate over the coming months. Some of these stories could become disentangled from some others. You can't just put them in a group. You got to focus on specific names. Where do you own Alphabet? Where do you own Microsoft? Tesla, what are the brand issues? I think that's the best way to navigate it.
Let's go back to Tesla for a second. When we talk about Elon Musk, it's a bit more than brand issues right now. I'm just looking at his year-to-date losses right now, $132 billion for Elon Musk. That's a lot of money even for the richest person in the world. Larry Ellison down more than $23 billion. Jeff Bezos down about $22.5 billion. Jensen Huang down more than $20 billion. What do you make of that? The fact that these tech billionaires, their companies, they powered the market over the last 2 years, but now they're taking some big losses.
It's been a dark time for Tesla shareholders, especially this year, right? I mean, because when it comes to Musk and it comes to all the opportunity and the innovation ahead, right now, it's not just brand issues, it's distractions. And I think it really starts now become almost the symbol in terms of the sell-off. Look, and I think we talk about gut check moment, Frank. I think this is going to be one of those periods for Musk, for Tesla, they really need to navigate because this is going to be a key 3 to 6 months ahead. There's so much innovation ahead, and we continue to be so bullish. But no doubt, this has really been a really white knuckle moment for Tesla shareholders.
Yeah, I got to put you on the spot. Everybody's listening to hear what you have to say. Give us your top picks in tech at this point, not what's going to work 10 years from now. I mean, for people that are buying, looking for opportunities over the next year or so, I want to point something else out. This is from Bespoke. So obviously yesterday, one of the worst days for the stock market in years. The NASDAQ, it's fallen a similar amount over the last 13 trading days than it did in the first 13 trading days of COVID, just to kind of put that in perspective. What are your top picks? What would you buy on the dip right now?
I think there's 5 names here that I buy in terms of the names that I view as just table pounders relative to where I see it 6, 12 months now. It's Nvidia, it's Apple, it's Microsoft, it's Tesla, it's Palantir. To me, those are the 5 names, the way that they've sold off, that I continue to view as sort of the names that I would own over these next 3, 6 months. Right here, right now.
Okay. When we're talking Nvidia and Tesla, hands off right now. I know you're one of the biggest bulls in Nvidia we've ever seen. You've been, you cover Tesla as part of your EV coverage. Is it just hands off right now? Too much volatility?
I mean, look, I've always viewed it, and anyone that's followed me for decades, like in the chaos creates opportunities. When I look at Nvidia, you're talking about there's only one chip fueling the AI revolution. This will be, I believe, all-time highs for Nvidia will happen in 2025, despite what we're seeing. For Tesla, it's navigating this moment. We're at 6 times we've had 50% sell-offs. Damn. Every time that's been the opportunity.
I know it's like 8:30 in the AI party. I think the cops may have shown up.
The stock market is abuzz with the latest news surrounding the artificial intelligence giant Nvidia. As of March 24th, 2025, Nvidia has experienced a turbulent period, with shares down approximately 9% since the beginning of the year. Concerns related to the Chinese AI chatbot, DeepSeek, economic uncertainties, and proposed tariffs by President Donald Trump have all contributed to the recent fluctuations in Nvidia's stock performance. With the stock now rising again, many investors like Dan Ives believe this could be a strategic opportunity to invest in a company with promising fundamentals. Welcome back, everyone, to Investocracy.
Yes, there are geopolitical concerns about the Chinese having advanced chips when we tried to get them not to, but then also on the cost side, there are constantly these questions about if they're just if they can build a better mousetrap to do it cheaper, and what that ultimately means for these capex valuations that we've seen for some of these chip makers here. Does this change anything?
Well, actually, right now, I would consider the Chinese chips to be more at the lower end of the Hopper range. If you look at the previous generation of the Nvidia chips, Jensen went on stage last week and announced almost jokingly with his sales team right in the front there, not to buy Hopper chips anymore because the advanced Hopper chips and now the Blackwell chips are here. So I think China is definitely offering some chips, but still a generation or two behind. But I think if you turn to NVIDIA and the demand issue, I know that's been weighing on the streets concerns for NVIDIA. Here's what I would say. People need to start looking less at the training side of using these chips, the demand side, and now look at the inference side. That is, when you use the model, when you as a consumer, when you as a business use these large language models, we're going to see multiples of demand of what we see now when you use the reasoning models. I'm sure our viewers here are familiar with the O1 models and other reasoning models from OpenAI. They're familiar with the DeepSeek R1 model. These reasoning models need 150 times the compute as the previous quick, just getting an answer model, very simple answers model. So you're talking about not only demand increasing on the training side, I would recommend that we really look on the usage side in terms of using these reasoning models. We're going to see continued demand. I would say, as a watcher of the space, we're going to continue to see. I think the sell-off NVIDIA is a bit overblown, and I think people need to start seeing Blackwell have not only good production numbers, which Jensen announced last week that they got over their production hurdles, you may have heard, but also the demand numbers. And what we're seeing from the top 4 cloud providers, just top 4 CSPs, is 3.6 million GPU demand on Blackwell. So I think the street was right to kind of take a quick look at what exactly is going to be the demand curve. But I do think, given the rise of the reasoning models, we're going to see increased demand.
So, according to NVIDIA's recent financial data, it is evident that the company's gross margin has been on a declining trend in recent quarters. A high gross margin signifies operational efficiency and pricing power. However, NVIDIA's gross margin dipped to just over 73% in the fiscal 2025 fourth quarter, reflecting a slight decrease. This decline could be attributed to the increased costs of producing NVIDIA's chips and other AI infrastructure. Despite the decline in gross margin, NVIDIA's earnings still saw an increase from the previous quarter. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
What do you make of this report? I mean, part of the uncertainty of all of this has been the, iron fist, maybe olive branch. Back to the iron fist, maybe an olive branch. What do you make of it?
Well, I think markets should interpret it positively, because I think when we talk to our clients, many are viewing tariffs as punitive, potentially protectionist, and driving several economies into recession. This sounds like that we could actually have a positive case scenario with these tariffs, one that's either mutually agreed upon or if it's reciprocal, but maybe a good deal for businesses. And I think it would set the stage for a much bigger recovery rally than we expect.
Afterwards, right?
Yes,
I mean,
after.
The problem is the paralysis, if you will, between now and then. Like, what are we supposed to do over the next 10 days?
That's the dilemma, right? Because we still have 8 trading days till April 2nd. Most investors are getting just nauseous from the volatility, so they want to throw in the towel. But we also know that markets will bottom, or have historically bottomed, before the event actually happens. The best example is the Cuban Missile Crisis in 1962. That was a 12-day crisis. The stock market bottomed 7 days into that crisis, recovered 2/3 of the losses before the resolution. So I think that's a decent template for today.
What about the economy? I mean, listen to Nike, FedEx, put that on top of what we've already heard. Are you concerned about where the economy's going?
It's been pretty shocking how quickly sentiment deteriorated. I can understand for consumers because the president's very divisive, but for CEOs, That's been a shock. CEO confidence has fallen, and they've kind of been sitting on their hands. So we know there's an impulse of a growth shock underway. But if this is something that doesn't last months, then it's very temporary.
I mean, it depends, to what degree consumers remain skittish. CEOs are paralyzed in their own right because they can't really make any moves because they're not sure what's going to happen, and ultimately whether a growth scare spirals into something else, which Jeffrey Gundlach gave me his view yesterday right here on Closing Bell. Listen.
I do think the chance of recession is higher than most people believe. I actually think it's higher than 50% coming in the next few quarters.
50, 60%? I mean, if he's right, what does that mean for the stock market?
Well,
too expensive.
Well, the S&P had a 10% drawdown. That's already priced 40% chance of a recession. I'd say the markets aren't agreeing necessarily with his view because China, Europe, Canada, Mexico have been massively outperforming the U.S. since February 18th. Those economies should be tumbling into recession if we have punitive tariffs. So I think markets are actually more paralyzed than necessarily pessimistic. And
I'm sorry, finish your thought.
But because the market is the economy, I think to the extent that stocks rebound sharply after April 2, if they do, I think it really staves off future economic
Is the
weakness.
market the real economy?
I think it's these days, to me, I think it's a really good snapshot of actual sentiment and actually even CEO decisions. Because as you know, when stocks fall, companies lose confidence. And as stocks recover, CEOs gain confidence.
What about the idea that Gundlach also put forth that in his words, unintended consequences of all of the rhetoric from the president is making people think twice, especially overseas, about investing in the U.S., and the view that Europe is just a better value and offers even less risk than before? How do you play that?
We hear a lot of folks talking about that, but as you know, Europe tends to be single stock concentrated indices. So if you're buying Europe, you're basically buying industrials and financials. If you're buying Korea, you're buying Samsung. So I think if someone is looking for the best companies, they're still going to end up buying the U.S. One of the things that we have to keep in mind is this trade deal, if it's acceptable, could actually basically sort of blunt this whole issue of trade in the future, and it would actually make the U.S. more attractive again.
Looking ahead, NVIDIA's CFO Colette Kress anticipates that the company's gross margin will stabilize in the low 70s as the next-generation Blackwell chips gain momentum. Subsequently, there is optimism for the gross margin to rebound to the mid-70s by the completion of fiscal year 2026. Analysts are cautiously optimistic about NVIDIA's future performance, forecasting a rebound in the gross margin and substantial growth in diluted earnings per share for fiscal 2026. Considering NVIDIA's current forward earnings multiple of under 26 times, the stock appears more reasonably valued than in previous periods when its forward earnings multiple exceeded 50. However, there is a caveat. If NVIDIA's margin continues to shrink, the stock may be overvalued at its current price level, leading to a potential surge in its PE ratio. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Today says, don't be forced to live in regret, buy NVIDIA. It's our top pick. They say we 100% understand the near-term setup and the macro geopolitical risks that are pressuring that stock, but this short-sightedness has resulted in the name trading at 16 times calendar year 26 earnings power, which is too great an opportunity to ignore. We believe when we look back, this too will be viewed as one of these key inflection points. You must agree because you bought more of it at $117.
Yeah, actually, I went back into it. If you recall, I was on the show. I sold it when earnings came out at about the 130, 131 level. So got back into it. Look, the growth is there. Why I sold it was basically everybody loved it. Everybody still loves it, but now at a lower price, so I'm comfortable there. So it's a trading market. Now, there are some positions that I don't sell out of, that I don't cut back, that I periodically add to as we go on. Because the way I look at it, Scott, is this. is that I love what I own, so I buy what I love. I'm not looking to, leave monogamy with my portfolio and stretch into other areas. The exception one we'll talk to later, which I think could be a long-term hold. So, yeah, there's a lot of beta in it. I like beta because I can manage the risk. And I like these companies because they are insulated from the economy. I take a different view of the direction of the economy than Jim does because I do see the economy weakening.
Bryn, what about this Cantor note for your NVIDIA as well? Is it going to be short-sighted to not look at this today and buy it? And will you have regret if you don't?
I think so. I think if it's in your wheelhouse, I think you're going to see the value guys. I mean, Jim, you would say you're Gartby, right? You want to buy good companies, make money. We bought more at 111. I just think it's right in front of you. It's right there. This is a great company. I have not heard one hyperscaler, whether you're in the US, China, wherever, that is cutting back on the spend, and you're going to get more investment. I mean, think about just what SoftBank is doing or what they've promised to do. This has a long runway. And I don't care if it's popular or not, the company itself is getting stronger and stronger from an earnings. They're competing against themselves. They're coming out with another Blackwell. And so it's like, I don't understand how the competitors are keeping up when they're competing and cannibalizing their own products with new products. It's really just ingenious. So I think this is a durable company. It's cheaper than Apple. It's got much higher margins, revenue, and earnings growth than probably any company of this size. And so I think it's a wonderful time to own this stock. This is when you want to own it, when people are kind of unsure about it. Once they're sure about it, the stock will not be at 122, it'll be at 160.
In conclusion, NVIDIA stands at a crossroads, poised for potential growth as it navigates through the challenges in the AI landscape. Investors must monitor the company's actual earnings trajectory to assess its fundamental performance accurately. With analyst projections hinting at a rebound in gross margin and significant earnings growth for fiscal 2026, NVIDIA presents an intriguing investment opportunity for those eyeing the long-term prospects of the company. Finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.